Some guy forced me to look at Stellantis the other day, and Stellantis looked super cheap. In case anybody missed it, I was streaming on the weekend. And Stellantis is like, it's a problem company, and it's been two or three times earnings for a while, but I don't care. I still own it. All right, so let's look at Ulta Beauty. I don't know anything about these beauty stocks, but I'm learning more and more about them. I did a model offline for L'Oreal very briefly, and we have one for for e.l.f., and now we're doing one for Ulta. So I really don't know much about Ulta. $368 stock. Our new description button has these analyst ratings, and pretty soon you'll be able to click the analyst button and start a conversation with them, or look at their phone number, or look at their ratings returns. I don't really care too much about stock market analysts, but wow, they have a lot of analysts covering them. Okay, so let's say you want to talk to the management of L'Oreal. Not easy. You know, L'Oreal's a big company. They don't have the time to talk to you, but they have the time to talk to Dana Telsey. So you write a check to Dana Telsey, and she talks to L'Oreal, and you talk to Dana Telsey. And if you have a good question for L'Oreal, even though they're a $300 billion company, is that right? I got that right? $230 billion company, right? One of the biggest in the world. You can get the CEO to answer your question, but you have to go through one of these people. And that's why investment banks still are in business. They may not be able to tell you what price the stock's going to go to. They might have an idea, but they're probably just as good as guessing. But you can get that kind of insight from them because they talk all the time. And, you know, someone like Dana Telsey might have, if you develop a friendship, there could be some career opportunities for you, or an investor, or whatever. You never know. So it's good networking too. Maybe you can find a new job or something. Who knows? This person is really bearish on Ulta Beauty. They have an underweight rating. And again, you have to be a client of the firm, but it's probably easier to be a client of these firms than you think. And sometimes they'll just talk to you regardless. On a next edition of Goodell, you'll have their emails and phone numbers. So there's kind of a meme in the hedge fund community and the Wall Street community that all the retail analysts and consumer analysts are women, and there usually are baddies. Anyway, that's just a new feature for Goodell. Right now, my stock ideas are not doing great. Well, some of them are, but the big one I have right now is this ADMA, where they had this auditor resign. And the stock's been under a lot of pressure since their auditor resigned, and I think it's a buy, but it's kind of been a little bit of a dog. Can't get them all right, I guess, but I still think it'll pop back up. All right, Ulta Beauty, 47 million shares outstanding. So 17 billion market cap, kind of a medium, mid to large cap company, like perfect for Buffett. So I guess makes sense that they now are a stockholder. Okay, they did not grow sales last quarter. Interesting. It's like they may be struggling right now a little bit. A lot of accounting is gibberish, and sometimes it's good to know how much the dilutive instrument is impacting basic EPS. Maybe that's a good way to look at it. Wells Fargo wilding out. You know, how do you grow as a bank? It's hard. Give them more accounts. Yeah, but then your deposits per account is falling. How do you fraud your way out of that? But you know, it's something CNBC would say. They'd be like, Wells Fargo, a remarkable account growth this quarter. Joining us now as the CEO. The guy probably doesn't even know why it's happening. He's just got like a Kamath type dude doing it in the background, and the Kamath guy gets promoted until it's over. But PEG ratio is like a weird way to normalize growth in PE. It's not really useful, but it's getting at the right idea. Like, it's a good stepping stone for investors trying to think about, like, okay, how do I incorporate growth into my thinking about earnings? And you eventually take this journey to DCF land and NPV land, where you'll really think about it. And then there's more journeys to take. Like the beginning investor, no, if you're a noob investor and you want to put like $5,000 in Goodell, I'm going to pass on that, but I appreciate it. Anyway, when we start investing, we sort of don't even look at earnings at all. We just look at stock price, memes. What else do we look like? You know, consensus or sentiment, social media, This is like phase one for all investors. Like some people even look at the stock ticker and they're like, wow, I like that stock ticker, or I like the name of the company, I'm going to invest. It sounds like a cool company. I don't even think about, financial statements. And then we kind of look at financial statements, but we don't really do any computations. We just kind of hear about, okay, the company has earnings, or, the company is growing or something like that. We just sort of like vague understanding. And then finally, we start to think about PE, which is sort of these like kind of dumb ratios, price to earnings or price to sales. Like, okay, there's a such thing as these things, and we start to think about them. We don't think about them too intelligently. And then at some point, we just use them on a level one thinking basis. And then we kind of start to think a little bit more intelligently about them, almost to the point of a professional. Now, what's funny about this is, in the pyramid of stock thinking, like this is honestly where a lot of Wall Street still is. Like a whole bunch of people in Wall Street stop right here. Now the PEG ratio is as if it was like a really small step in this journey. Like it's a really quick step from PEG to like, you can even say like normalized PE is probably even better than PEG ratio, to like just DCF land. And the problem with DCF NPV land is it's not perfect either. And as you go down this, kind of get to like reverse DCF, which I think is a really good place to be in valuation and thinking about stocks. I think this is a reasonable place to be. But there's more steps, and a lot of people sort of think about this and they overthink it. And this maybe is like not necessarily next, but it could be like parallel, is they just think about inputs and sensitivity. You don't have to calculate DCFs, you just know what the inputs are and how sensitive the market is to them. And that's sort of one way to look at it. What could come next after this? I'm not sure. Probably the hardest part here is thinking about things as a management or project IRR basis. This is something almost nobody does, except for your boy. And this is like probably I don't know about secret sauce, but like, because some investors are really good with just technical analysis. Like you can be a great investor just doing this. Because the biggest problem with DCFs is that they don't really understand management. Companies are not static, they're living, breathing things. And to understand that, you have to understand that management is always seeking to provide returns, depending on the management you're dealing with. So this is your roadmap on at least philosophical thinking for investing. You have to make it through 7 stages to get to nirvana. 𝐷𝐸𝐻𝑚 is fine, he's just not a professional. He's a academic. So he doesn't actually have to be battle tested. He's never run a company and he's never run a fund. I've done both. So I don't think he really gets it the way. He's not bad. I mean, he's definitely a great place to go to start. He's not him. What's going to happen to Joel Springer after Cassava fails? Is he going to find another stock to look at? He's done 500 videos on these stocks, the same stock. If I keep talking about the same stock over and over and over again, it's time to pull the plug. It looks like ULTA doesn't have any debt. What funds did he have? What publicly traded companies has he started? The guy's only got a YouTube account. He's not even good at that. Like a rehearsed video every day. He thinks Mossad is suppressing Cassava. Now, I've been to federal prison. I'm not scared of anybody. But that's kind of a scary guy. 500 videos in the same stock. Crazy tinfoil hat. We gotta find this video. Oh, he looked different when maybe he had not lost all the money yet.
Tendies, friendies, welcome back to Tendies Club. Great to see you. Got a great show for you. We made the new channel. It is called End Alzheimer's. It's called End Alzheimer's. I thought it'd be a good.
He looked much healthier.
History governing itself.
This guy's really a conspiracy theorist. So he's been on this Cassava thing for years. Something happened over just 1 year. He went from like healthy looking to...
For you, we had a judge blowing out retail...
Whoa. Okay, hold on. JP Morgan is the world's biggest bank. It's worth $634 billion. 634.4 as of a second ago. I like how that moves. Up, 634.8. It's going up as we speak. But you're telling me JP Morgan makes most of its money doing what? Let's go through this again.
Blowing out most of their money.
Most of their money? Can we transcribe this? I'm no fan of JP Morgan, mind you. Okay, I got Notepad here, the best text editor. Let's start from scratch. Okay, I type 130 words per minute, and I have this on 50% speed, and this guy talks too fast.
And it's a huge ruling.
It's a huge ruling. JP Morgan's still $640 billion. I wonder if the guy's ever heard of the concept of a loan. It's crazy that these banks, like most of their earnings come from loans, right? Corporate loans, mortgages, literally mortgages. That is most of JP Morgan's earnings, mortgages. The investment bank is only a small portion of the earnings. The biggest investment bank that's investment bank only, right, is Goldman. 7 billion. Nope. Let's see here. GS. Yeah, 168 billion. And then Morgan Stanley is 181 billion. Investment bank part of JP Morgan is very small compared to the commercial retail bank part. Like, so if you look at like Capital One or Bank of America, well, Bank of America has a small investment bank. Capital One is 60 billion, no investment bank. And then Wells Fargo, very, very small investment bank, 231. Does he understand that like JP Morgan is a big investment bank and a big commercial bank? Let's get back to ULTA. Get back to reality. Don't know anything about this space, but it's exciting. It's very similar to pharmaceuticals, actually. The margins are very high. You're making a chemical at the end of the day. Ladies are putting that chemical on their face. And we're making lots of money. Everything works, pretty much works as God intended it, right? Oh wow, cash flow looks really ugly for ULTA. We ain't buying no retailer, bro. What was the last retailer stock you bought that did well? I have no clue they were in a retailer. I was open to 10. I've done 3 minutes of work on this. What do I know about women's beauty? All right, so it's 41% cosmetics. No, I didn't say ULTA is a buy yet. Nope. I barely know this company, barely looked at it. Looks like a crappy little retailer, to be honest, but I suppose the valuation isn't so bad. Is there like some long-term demographic thesis that we have so much disposable income, we're just going to spend it all on makeup and skincare, beauty care? No, I like Roblox. I don't think Roblox is a short, like, at all. ULTA had some decent revenue growth. It's just slowed pretty remarkably. But they were growing fairly rapidly. I'm trying to think about how Buffett would think about it. I don't disagree, Scott. Retail is, in general, retail. I just hate retail. The worst business known to man. 6 million a store, going to 7, going to 8. So revenue per store has gone up a lot, but they're not opening many stores. Very, very low store growth. But the fact that they're growing revenue per store is really impressive and bullish. Why they can't find more stores to open, another story. Make sure you guys check out godelterminal.com. Adma, let's go. I need 17. Trashy and Nibbles get it. I'm going to sacrifice both of them to the Haitians. I think the robots did fine. I think FSD is here. I just think robotics is not here. Humanoid robotics has a way to go. I think FSD is basically here. We're right on the precipice of it. And AI can do amazing things. Controlling video games and things like that. I don't see why it can't do cars. And obviously Waymo's out there. Tesla's out there. Andrew, I like software and pharma. Retail is, you're buying somebody else's product. In many ways, you're at their mercy and you're selling it for a small markup. If you think about it, it's kind of a business at its face. But especially in a world where retail is now happening more online, doesn't mean you can't make money on it. It's just like a little bizarre. Not where I'd want to be. They have really good margins for retail. They kind of have insane margins for retail. 40% gross margin for a retailer, about as good as it gets. It's really not many that are better than that. So I'll give them that. Give them credit for that. But they do have a lot of revenue. It's not like they have a small market share. I do wonder if like CVS and Walgreens will cede a lot of market share to these guys. Yeah, they're certainly not growing stores, which alarms me a little bit, but it's better than not growing revenue per store. Retailers don't have moats. They had a big decline in revenue this 1 year. That's really alarming. Are they that cyclically sensitive? I thought women will buy makeup till freeze is over. Just gonna use a little less lipstick today. The economy's in a recession. Yeah, right? Totally negative EV. I mean, I think it's kind of incredible that revenue per store has gone up so much, but we've also had inflation. Don't forget. Can't forget about inflation. All right, so revenue per store has averaged like 8%. Has makeup inflated by 8%? It's definitely inflated by like at least 3%, right? So maybe this isn't that impressive. And then they grow stores. I mean, they basically stopped growing stores, which I don't know why they've been doing that. It seems like they are going to grow the business over the long haul. But like, I just have this like deep distaste for retailers. Well, you have inflation, then you have mix shift too. So you can shift to kind of slightly lower price products. ASPI, or no, BROS. This is Dutch Bros. This is a retailer as well, I think. But ULTA 10/14/2024 avoid. Okay. EB, this was Eventbrite, really weird company. Cool opportunity there. Adma's breaking our heart. Moderna, my sleeper pick. Rocket, which has been in this like stasis forever. Mora, Novus, GPCR. These guys have their own GLP pill. So you might want to take a look at that one. It's starting to get, it's 8% down from when I recommended it, so not bad. Rare, Perry, CRNC. Maybe they're realizing that the Intel CEO is not such a great thing. Corvus has been going up. That's now up 20% since my recommendation. Let's go. I don't know if it's the next DUPIXENT. That's saying a lot. DUPIXENT's just the biggest drug and one of the biggest drugs in the world. Toast. A lot of these other ones are pretty flat. Clearside. I sort of told people to stay away from that. I'm happy that worked out. A lot of people were in Clearside. I still have to go back and annotate all the other picks I made. It's definitely not a complete list. Dutch Bros. A drive-through coffee, energy drinks. So it's like drive-through beverages, mostly coffee. Has anybody gone to one of these? Grants Pass, Oregon. Shake Shack, short? That's where I get all my food, dog. Coffee's good, better than Starbucks. Personally, anything's better than Starbucks. 3 share classes, so 5 billion market cap. Okay, so they have a little bit of the cash, a little bit of debt, no real net cash here. I like restaurants way more than retail, even though they're kind of fundamentally pretty similar. Okay. Oh, because they do franchises too. Hey, they're growing like crazy. A lot faster than Ulta Beauty. Ulta's a lot bigger, obviously. Yeah, they're growing 325 over 250, 30% revenue growth. About as fast as it gets for a coffee shop. Yeah, I don't think RX is long. I don't think AI and medicine, well, AI and pharma, I don't think they fit well together. It's just a meme. Revenue's growing, but I don't think the company has any net income. But in really hyper growth, like consumer stocks, that's pretty typical, especially consumer and retail and restaurant, because they have to use capital to grow the business. And that can be temporarily dilutive. I like 𝐉𝐸𝐻. It's been such a dog for so long. I recommended it. I have to go find the date I recommended it. Yeah, I don't think AI is going to help 𝐉𝐸𝐻. I don't see why it would. Maybe a little bit. 𝐉𝐸𝐻 is unique because they just focus on the drug discovery part. So any little help there would be big help for them. So it kind of probably, if it's going to help anybody, it kind of would help them. But like, it's not going to help Pfizer or Merck because like the bulk of the hard part of pharma is running the clinical trial and finding the biology. The drug part is easy. Now making antibodies isn't always easy, but AI will help a little bit, I guess. Okay, so these guys have negative cash flow, which again, in like this high growth scenario, it's not uncommon. You mean when I'm streaming, am I into big cap stocks? I just do whatever stock I get asked to do. So I've done some tiny market caps. I recommended this one stock, Peri, P-E-R-I, which is like a 100 million market cap. And we're short SOAS and Humusite and our favorite Cassava. And those are all pretty small cap. Some of those are really small cap. Ooh. No, Peri got wrecked because they missed guidance. Bing stopped paying them as much or something like that. They do most of their business through Bing, and Microsoft like changed the formula on them. Okay, so the B shares don't count. So it's really a 4 billion market cap. Yeah, Walgreens looks ugly, but I haven't looked at it yet. And I have to get through all the questions on Godel before I add another stock, and they kind of never stop. So if you want me to look at a stock pretty bad, I would go ask on Godel. Okay, here's how many shops they have. That's what they call them. So revenue per shop, basic idea here, $300,000 of revenue per shop per quarter. So it's like 1.2 million coffee shop revenue a year. They're adding lots of shops year over year. That's where the growth is coming from. Individual shops are not, I mean, they're going okay, but it's mostly coming from adding shops. Yeah, how many Starbucks locations? Let's see, so they have 912. $38,000 for Starbucks, so they have a way to go. They could theoretically 38x. $15,270 in the US. How about Tim Hortons? Is that well, let's try Dunkin. Dunkin Donuts, number of US locations. It's giving me literally local locations. 9,000, almost as much as Starbucks. Who's number 3, do you think, in coffee? So they don't even have 4% market share. We can't really include McDonald's, but yeah. Because it's not apples to apples, but let's try Tim Hortons. $639, less than Dutch Bros. It's all Canada? Yeah, we'll try Pete's and Bluebell. All right, they're 5,700 worldwide. So yeah, it's mostly Canada. Well, let's do Dunkin worldwide. It might be different as well. Mostly US. All right, how about Caribou? 750. $288 Pete's. What else? Blue Bottle? $78? Maybe 100? That range? Not many. So just in the US, they got 3%-ish market share. That's not including like independent coffee shops. I wonder how many, maybe we just look like how many coffee shops, period. $40,000, well, we got 27 right there. So independent could be like 10,000. I mean, it's market share growth. There's no natural growth, I agree with that. And the franchises, they're not reporting the franchise revenue and market revenue, right? They just report the sales of well, I guess they report the franchise royalties. Now, Starbucks was a great long, even though there was no growth I guess Starbucks grew the market. Dutch Mafia LLC? I had a great company name.